Welcome to today's Explainer, everyone. Today, we are putting on our business analyst hats because we're going to review what you can effectively think of as the financial statement of India, Inc. We're going to break down how the central government actually operates a lot like a massive diversified corporation. Let's just dive right into it.
So you might be wondering, how exactly does a government make money without taxing you? It's a fascinating concept. Look, we all know about taxes, right? Income tax, GST, customs. You can really think of tax revenue as the government's mandatory 9-to-5 job. It's compulsory. But outside of those everyday taxes, the government actually manages a massive, heavily diversified portfolio of highly profitable alternative side hustles.
And this really perfectly illustrates that exact divide. On the left side, we have tax revenue. These are the compulsory charges, a payment imposed on individuals and corporations that you simply cannot opt out of. But over on the right, we have non-tax revenue. This is where things get interesting. This is the government acting as a business operator, a lender, and a service provider. It's an alternative revenue engine that plays an absolutely massive role in balancing the national budget.
So if this were a corporate earnings call, we'd be reporting on 4 distinct business streams: interest receipts, dividends and profits, service revenues, and grants and aid. Let's take a quick tour through each one.
Starting off with Stream 1, interest receipts or the debt yield.
In this first revenue stream, the central government acts exactly like a giant corporate lender. It holds a vast amount of capital, and it deploys that capital by advancing loans. And who are the borrowers? Well, the central government lends money out to state governments, union territories, internal departments like the railways, and various public sector enterprises. In return for providing that crucial liquidity, the central government earns a steady, reliable stream of interest income, or yield, on those loans.
All right, moving on to Stream 2, dividends and profits, which we can look at as corporate payouts.
You see, the government isn't just a regulator, it's a majority shareholder in some of the country's absolute biggest conglomerates. We're talking major public sector companies like BHEL and Air India, alongside massive financial institutions like the Life Insurance Corporation of India, LIC, and various nationalized banks. When these state-owned giants generate profits, a portion of those earnings is paid out directly to the central government as dividends. It's exactly like holding stock in a wildly successful blue-chip company.
Next up is Stream 3, monetizing government services, encompassing commercial and administrative revenue.
This one is arguably the most diverse revenue funnel the government has. Here, the government steps completely out of its traditional regulatory role and operates directly as a commercial service provider. The government supplies specific goods and services and charges prices for them, just like any private e-commerce or service business would. And this massive service revenue pie is sliced perfectly into 4 distinct operational subcategories: fiscal, social, economic, and administrative services.
So, how are these specific services actually monetized out in the real world? Well, under fiscal services, the government literally makes profits from the circulation of currency. Under social services, think about media monetization. The government actually receives commercial ad receipts from state broadcasters like DoorDash. Economic services act a bit like a massive infrastructure and resources company, generating revenue from tourism, tolls on roads and bridges, transport, animal husbandry, and even forestry. And finally, administrative services bring in revenue through standard user fees, license fees, and of course, fines and penalties. So, the next time you pay a toll on a bridge or a penalty for a late filing, remember, you are directly contributing to this specific commercial revenue stream.
And that brings us to Stream 4, grants and aid, also known as global cash injections.
This final revenue stream functions a lot like inbound investment or international philanthropy. These are voluntary contributions and cash gifts. They can come from private individuals, private organizations, foreign governments, or massive global institutions like the World Bank. The government usually receives these funds for very specific, targeted purposes, like a dedicated relief fund during a crisis or a defense fund. But what makes this so distinct is that word right at the beginning, voluntary. That sets it completely apart from commercial service pricing or the compulsory nature of the taxes we talked about earlier.
So, we've seen how the government lends capital, acts as a majority shareholder in massive enterprises, monetizes a huge array of commercial services, and secures global cash injections. These 4 non-tax revenue streams are basically working tirelessly in the background to keep the machinery of the country running. So I want to leave you with this provocative final thought. If a government operates so much like a diversified corporate business with all these varied revenue streams, are we, the citizens, the customers paying for the services, or are we the shareholders benefiting from the growth? Think about that the next time you look at a national budget. Thanks so much for joining me on this explainer, and keep learning.